world is now pulling the rug out from under the U.S. The dollar is going to collapse. The dollar is going to be replaced by gold. Central banks are buying gold to back up their currencies. They're getting rid of dollars. They're getting rid of treasuries. We are headed for an economic crisis.
Hello. Welcome back. You just heard that warning? Gold and silver aren't just rising. They're signaling something. But what if this isn't just about market fear? What if gold is reacting to something structural? Something already unfolding inside the global monetary system. By the end of this video, you'll understand how the rise of gold connects directly to the emergence of the BRICS unit, why the fiat era that began in 1971 is under visible strain, and whether we are entering a new phase of gold-linked international settlement. Let's zoom out. In 1971, the United States formally ended the gold standard. From that moment, the world shifted into a full fiat era, currencies backed not by physical assets, but by government decree. Over the next 5 decades, the U.S. dollar became the dominant reserve currency, pricing oil under the petrodollar system, settling global trade, and anchoring foreign exchange reserves. That structure created enormous stability, but also enormous concentration of power. Think about that. Fast forward to today. The global economy is no longer unipolar. BRICS nations represent a massive share of global population, manufacturing output, commodity production, and GDP growth. We are living in a multipolar economic reality, but still operating under a largely unipolar settlement system. That imbalance creates pressure, and pressure eventually forces adaptation. Wow. Add to that geopolitical sanctions, rising sovereign debt, inflation volatility, and increasing political influence over central bank policy. Fiat currencies, by definition, rely on trust and discretionary management. When inflation erodes purchasing power or policy appears unstable, confidence weakens. That doesn't mean fiat collapses overnight, but it does mean nations begin exploring alternatives. And that's where the BRICS unit enters the picture. The unit is not a domestic replacement currency. It is being developed as an intergovernmental trade settlement instrument, a neutral bridge between nations. A prototype introduced in late 2025 outlines a reserve structure combining approximately 40% physical gold with 60% a basket of BRICS national currencies: Brazil's real, China's yuan, India's rupee, Russia's ruble, and South Africa's rand. That structure matters. It's not a rigid classical gold standard. It's a hybrid. Gold provides stability and credibility. The currency basket provides flexibility and liquidity. Together, they create a settlement mechanism less dependent on a single fiat reserve system. That's innovation, not regression. Over 40 countries have either expressed interest, entered partnership discussions, or explored integration tiers within this emerging settlement framework. Why? Because sanctions risk, transaction costs, and exposure to dollar clearing systems create vulnerability for many nations. When countries seek insulation, they build alternative rails, and gold, historically neutral and globally recognized, becomes the anchor of trust. Now, this is where economist Dr. Judy Shelton's perspective becomes relevant. She has long argued that fiat currency systems erode purchasing power over time and expose economies to discretionary central bank decisions. Her advocacy for sound money principles isn't necessarily about returning to a 19th century gold peg. It's about reconnecting monetary credibility to tangible value. And whether one agrees fully or not, her critique reflects broader global concerns about long-term currency stability. Meanwhile, observable data shows central banks worldwide have been increasing gold reserves significantly, particularly in emerging markets. At the same time, the share of global reserves held in dollars has gradually declined, even though the dollar remains dominant. That combination signals diversification, not sudden collapse. Big difference. Quick pause. If this breakdown is helping you see the bigger architecture of what's happening, thank you for being here. Your support helps this channel continue unpacking these complex monetary transitions calmly and clearly. Let's continue. The concept behind the unit also mirrors historical ideas like Keynes's Bancor proposal, a neutral international settlement unit designed to balance trade between nations without giving overwhelming dominance to one currency. The difference today is technology. Digital infrastructure allows gold-anchored settlement mechanisms to operate with speed and transparency impossible decades ago. So when people say fiat is dead, that's an oversimplification. Fiat systems are under stress, yes. But what we're witnessing is not instant extinction. It's redefinition and redistribution. As gold-linked settlement layers develop alongside fiat currencies, the global monetary ecosystem becomes more competitive and more multipolar. Let that sink in. Now combine that with rising gold prices. Gold often moves ahead of structural shifts because it responds to long-term purchasing power expectations. If sovereign debt levels are expanding, if trade alliances are rebalancing, and if new settlement systems are being piloted, gold naturally reprices. Not because of panic, but because of positioning. The unit does not replace domestic currencies. It does not eliminate the dollar tomorrow. But if widely adopted, it could gradually reduce reliance on the dollar as the default settlement instrument for trade conducted outside Western financial systems. That's evolutionary change, and evolutionary change reshapes systems over time. So, what are we really witnessing? Not chaos, not immediate collapse, but the culmination of decades of structural tension. The momentum toward incorporating gold-based mechanisms into international trade settlement is becoming increasingly visible. And if that momentum continues, we may be entering a new era, less rigid than the classical gold standard, but more disciplined than pure fiat dominance. Wow. The international monetary order is standing at an inflection point. The dollar remains powerful. Fiat currencies continue to function, but alternative rails are being constructed. Gold is being accumulated. Hybrid settlement systems are being tested. That combination suggests transition, not sudden destruction. And when gold rises in this context, the signal may not be fear. It may be alignment with a system slowly recalibrating. Think about that the next time you see another surge in precious metals. It may not be warning of collapse. It may be signaling restructuring. Thank you for watching and for your support. The real advantage in times of monetary transition isn't panic. It's understanding the architecture before it becomes obvious. And once you see how gold, multipolar trade, and the unit fit together, you can't unsee it. See you again very soon.